Consolidation in the dealer group sector is already affecting service providers such as research houses, with many raising concerns about potential long-term effects. Apart from the AXA-AMP merger, the last 18 months saw Count become part of CBA's network. DKN was acquired by IOOF, while Snowball and Shadforth merged.
Yeah, I think the first part to address is whether consolidation is occurring. Certainly it's occurring at the dealer group level, and as a result of that we're seeing real signs, I think, of consolidation of service providers, and research is just one of those.
In a recent example, ANZ appointed Mercer as a major provider of investment research for its Australian wealth and private banking business. With the exception of RI Advice, other ANZ-owned dealer groups previously used the services of Lonsec and Morningstar. In a similar fashion, as Commonwealth Financial Planning switched from Standard & Poor's to Morningstar, so did Financial Wisdom, which is owned by the bank.
Look, I think in the short term we just grin and bear it, and we realise that, you know, AMP owns AXA, which owns Genesis, and if you're a service provider to a number of those things, there's going to be some stuff there on the cost side that you're just going to have to suck up, and there will be some consolidation. However, I think there's a strong market out there for an independent voice, and it's not just in terms of an independent ownership. I think it's more about the alignment of the research. And you know, the whole issue which I think you want to touch on, which is breadth of research and coverage as a consequence of this consolidation, I don't think it really has much to do with the consolidation of the dealer groups. It has far more to do with the misalignment of the service providers.
Both David Bright from Zenith and Van Eyck's Mark Thomas agree the industry consolidation is merely cyclical.
But I do think this is a cycle, and it happens to have been a longer cycle as a result of all those factors, or it's been more sustained in terms of consolidation, but they do go in cycles. We've seen them before. People are always worried about the banks taking over. Well, yes, the banks have got a significant market share, but that's not always going to be the case. You'll get people that won't want to bang the bank drum, or they'll want to have a broader approach to their advice model. And when things become a little bit more buoyant and flows return, and we're not putting our money in term deposits, you'll see a return.
But Tim Murphy from Morningstar said opportunity could be found in winning the big contracts, adding the number of clients is shrinking, but the size of those clients is getting larger. Also in money management this week, financial planner sentiment shows little recovery, and AMP's aggressive push for scale in SMSFs.